This week at the zoo, the S&P 500 surged nearly 3.5% to close the week at a new all-time high. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we review the previous week's market news and we look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. Our first big story of the week is Hurricane Laura. When we reported on Laura in our last episode, she was just a couple of tropical storms. Nothing too severe, but she had shut down about 13% of Gulf oil production. Well, then those two tropical storms combined off the Louisiana coast to form a single Category 4 hurricane. Category 4 is the second worst category of hurricane, with wind speeds between 130 and 156 miles per hour. Laura ended up shutting down nearly all oil production in the Gulf of Mexico, which is why energy stocks sold off this week. Laura ripped its way through Louisiana, causing 10 deaths and up to $12 billion of property damage. Utilities and insurance companies may take a bit of a hit to earnings as a result of the storm.
Our next story of the week is that the economy has continued to improve faster than expected. We got lots of really positive numbers from June and July this week, including an upward revision of second quarter GDP. But the numbers that we're really watching closely are the early numbers coming in for August. The $600 emergency unemployment benefit expired earlier this month, and of course, Congress has failed to renew that benefit. And so we've been expecting to see some negative economic impact from that. And we saw the first sign of that maybe in the consumer confidence number for August. Consumer confidence dropped from 93 in July to a read of 85 in August, which is the lowest level since 2014, and one of the biggest single month drops in consumer confidence on record. So really big drop. But even if consumers are feeling less confident, that does not seem to have affected their spending patterns yet. JP Morgan Chase released some August credit card data that showed consumer spending is continuing to creep upward at more or less the same pace since the expiration of those benefits. And OpenTable released some restaurant booking data that showed the same thing, continued steady increase in restaurant reservations as well. Jobless claims improved this week despite having missed expectations and actually increased last week. We were watching last episode for possible reversal of the recovery trend in jobs, but this week the jobs report seemed to lay that to rest. It looks like last week's bad jobs report was a bit of a statistical anomaly. So we're going to continue watching jobless claims to see what happens from here. So far, we've seen no real impact from the expiration of that unemployment benefit. But that big drop in consumer confidence may be a canary in the coal mine that warns us that we might see some impact next month. That's assuming that Congress doesn't pass a stimulus bill in September to extend that benefit, which honestly it probably will in early September. So we've got to keep an eye on those stimulus negotiations as well to see what happens with that.
And finally, the last thing we want to cover this week is seasonality. September is traditionally the weakest month of the year for stocks, and September and October are usually big losers in presidential election years when an incumbent gets ousted. With incumbent President Donald Trump trailing in the polls and the giant technology companies arguably way overvalued, it's very possible that we could see some kind of significant market correction happen in the next 2 months. So it may be a good time to stay defensive on stocks. And now it's time to talk about the stocks we watched last week. What were you watching, Chris?
Well, last week I watched HP, Merck, and Intel. I expected HP to beat analyst expectations on its earnings report, and that's what it did this week for a nearly 9% gain for the week. A really good week for HP stock. And I have to say that the earnings were so impressive that the stock actually still looks cheap even after this big bullish move post-earnings. If HP dips next week, I will probably buy some more shares. My other picks were winners as well. Merck gained close to 1% on news that it got some approvals in Japan for its cancer drug Keytruda. Keytruda has consistently delivered those FDA approvals, those positive trial results. It's going to be a big moneymaker for Merck, I think. And Intel gained nearly 2.5% this week as investors grew more enthusiastic about the company's plan to accelerate share buybacks. How about you, Robert? What did you watch last week?
Last week I was watching Activision Blizzard. The stock almost reached 85 midweek and dipped early Thursday morning before the launch date for the new World of Warcraft expansion, Shadowlands, was announced at Gamescom. And then the stock rallied until early Friday morning where it dipped back down. I'm going to continue to watch the stock and probably look to enter under 82. I was also watching Bitcoin, which survived over a full month over the 10,000 mark, which has only happened twice during Bitcoin's lifetime. And shortly after this has happened, it's usually always dropped down to below 8,000. So it'll be interesting to see if this trend continues for a third time. Let's talk about stocks that we're watching this week. Chris, what are you watching?
Well, I'm going to keep watching HP. I think that it could continue running on the strength of that earnings report. I'm also going to watch Gilead Sciences. On Friday, I was surprised when Gilead triggered a buy alert that I set several months ago. I haven't looked at Gilead Sciences in ages, but the stock has been selling off in a big way on news that its drug remdesivir is not effective for treating COVID-19. And so it finally sold off down to a support level where I had set my alert. There's support there from volume and also support from a trend line. So it's got kind of the double whammy of technical support. So I was looking at it Friday, thinking about buying it. I mean, it's not the best value in the market, but it was looking, like a fairly decent value. And then aftermarket on Friday, the FDA announced that it has approved remdesivir for emergency use on moderately ill COVID-19 patients, despite the negative clinical trial data on the drug. So, I was thinking, boy, we've got that double whammy of technical support. We've got this piece of news that looks like maybe remdesivir will get a little bit of income this quarter after all. So I went ahead and bought some shares after hours, and we'll see if the combination of news and technical support causes a nice little bounce next week. I think it probably will. What are you watching this coming week, Robert?
This week, I'm going to be watching Zoom. And I talked about Zoom back in 2019, and I've had the unfortunate luck of not holding onto the stock through this year. But on Monday, they will publish their quarterly earnings report. The stock ended the week just shy of $300, and I think it may end up blowing past it if the earnings report is phenomenal. However, this quarter does include an exodus of companies that abandoned Zoom due to security concerns. But at the same time, schools around the country are returning, with many using video conferencing to prevent the spread of COVID. So I've even heard of preschoolers using Zoom for class. Not sure how that will work out, but I think as much as I try to convince myself the stock is overvalued, it may actually be undervalued if this trend in education continues even after shelter-in-place orders are ended.
All right, folks, if you heard anything useful on the podcast today, please give us a like, share, or comment on YouTube. You can subscribe to us on YouTube. You can also subscribe to us on your favorite podcast app, including Podbean and iTunes. We don't do any advertising for the show, so your word of mouth is the only way that we get the word out. We really appreciate your support. And if you would like to financially support the podcast, we've also got a link to Webull, which is a trading platform underneath the YouTube video. If you click that link and you open up a Webull account and deposit $100, then you get a couple free stocks, and we will also get a couple free stocks, and that helps support the podcast. Thank you all so much for your support. Thanks for listening, and we will see you back in the zoo next week.
See ya.